Good morning, ladies and gentlemen. Thank you very much. I just want to talk about a particularly important issue, especially as we think through APIs, all this digital payment, innovation going on in the digital payments economy. And, for me, I'm both a techie and a founder, a business person. So I know a lot of us kind of get caught up in the tech of how these things work. And I think it's always necessary to bring everything back down to the microeconomics, to exactly who we're serving, which is the customer. And think about how we can together build digital platforms for our businesses, because in a world that's becoming more and more a digital economy-driven world, we have very important things to protect and things to do in that world. So I'm going to be talking about payments is for people, how to build payment platforms for the digital economy. I'm not sure where I should direct this. Great. So I'm going to start first by talking about what Flutterwave does. Sometimes it's very hard to describe because we build something that people can't see, which is infrastructure. And infrastructure is tricky, right? Because I can't demo infrastructure to you. I can't tell you what it does, and many times it doesn't actually change the front-facing experience. But then, you over time can see the usefulness of infrastructure. For example, many of our websites run on AWS, but how many of you have seen AWS? I'm sure very few of us can say they've even seen the dashboard of AWS, but it's infrastructure that literally, if it goes down, everybody feels the impact. So what we do at Flutterwave is we build infrastructure to help banks and businesses build seamless secure and seamless payment solutions for their customers. And the reason why we're able to do this is because we have a lot of experience working with tons of financial institutions and even regulators to define what this infrastructure should look like. So in terms of who we've been working with over the last year and a half we've been in existence, we've worked with over 30 bank partners. We have a lot of merchants onboarded through our financial institution partners and also directly. We've processed a lot of payments, and we've gotten a clear sense of how this infrastructure should work at scale. It comes with a lot of learnings. It's not perfect infrastructure yet, but every day we come back to work, working very closely to make sure these things can happen. Here are a few of them. We have a Pan-African vision for the way payments should work. And the reason why we do is because we've seen a lot of things happen over time where Africa is literally being excluded from the global economy. So every other country has wonderful payments infrastructure, things that work, infrastructure that works, but then Africa is basically just caught off and left behind. And increasingly, I don't know how banks are thinking about this these days, there is a disintermediation of African institutions going on. Many banks might understand the challenges right now with correspondent banking and with the issues with being able to enable your customers to transact around the world. And we see that as a huge threat to our livelihoods, to our society. If we basically are reliant on international banks and then end up, at the end of the day, being completely cut off from the rest of the world. So a big part of our vision is how do we aggregate Africa as a solid economic bloc, especially being one of the fastest growing, and we'll talk a little bit about that. And then how do we scale a Pan-African vision for payment so that we all come to the world as one solid financial bloc. We've raised quite a bit of money from some of the most successful fintech investors in the world, and they give us a lot of information, guidance, networks about how to build world-class payments infrastructure that works for Africa, but is also world-class. So I'm just going to talk about a few quick things in my presentation within the next 7 minutes. And my hope is that this basically leaves some thought in people's minds about how they should be thinking about why it's even necessary to be, one, a digital business and build digital payment platforms. So the first thing is, we're going to talk about the landscape today. And the first thing to understand is, the truth is there is a market. I know many people don't believe there is a market, but there actually is a market. There is over $720 billion of payments, long-distance payments made across Africa. And how we define long-distance payments are payments that don't need to be made face-to-face. Now, why that's important is that cash doesn't scale very well in those scenarios, right? If I want to send money to my mother in the village, if she has a bank account, I can send her money faster than I can send somebody to the village, right? So it's very important if we can actually build infrastructure that enables long-distance payments, we can actually capture the opportunity that exists today and which is growing. But today we've made not very much progress, 15, 20 years later into the electronic payment story. We have less than 5% of payments being processed via the card networks, which are kind of the standard globally. And we have less than 4% of African merchants accepting payments. So everybody understands there's a lot of work to do. And we're all working very hard to improve adoption. So it's not for a lack of effort that we're here. But the challenge we have right now is, the challenge we have right now is we're overwhelmed with many options that are not working together. And so the merchant is thinking, what option do I actually integrate to get me to the most number of consumers? And the primary challenge there is we don't have any aggregated service. We're not really working together. There are many efforts to make this happen, but this hasn't happened fast enough across the continent. And so what we have now is a very interesting scenario. In our studies, we found this is kind of like a computer function that basically describes what's going on. If merchant needs to accept X payment method and the payment method can be converted to cash, merchant just basically accepts cash instead. It's just easier. And what you're seeing is cash is the infrastructure, and that's why ATM transactions are still one of the highest use cases for electronic payments today, right? Now, why is this a bad thing? This is a graph of Amazon's takeover, basically, of retail. And the reason why it's able to do that is because it's a digital-first commerce company. So if you compare Amazon to Walmart and many other Walmart-type companies' share of sale, you see Amazon is eating a larger and larger share of that because they have a concept they call negative cash flows, right? So you pay Amazon immediately, but it takes 30 days to pay its suppliers, or maybe more. And so as a result, it can cycle that cash much faster and at much lower margins, continue to drive down prices and dominate traditional players who actually have to manage infrastructure and cash across multiple things. And it's a very practical example of what's going on across many other industries, right? You have a lot of companies that, because they literally don't have any assets, are basically able to leverage this concept of negative cash flows to continue to drive down margins and basically change the nature of how resources are aggregated in the economy. Now, here's the interesting thing. None of these platforms have a lot of traction in Africa yet, but that could change very quickly. And everybody now understands that Africa is the last frontier. There's nowhere else this battle remains to be fought. And that has to create a sense of urgency with all of us. If we do not, within the next few years, come together and cooperate and build a digital platform for the digital economy, what's literally going to happen is we're all going to be riding Ubers, and we're all going to be on Facebook, and literally they can determine how our entire country, our entire continent works. However, if we collaborate and build digital platforms together, we might be able to actually stem the tide and reap the benefits of what is going to be the largest leapfrog in the digital economy. Now, this is the practical challenge that we try to solve at Flutterwave. Cash cannot scale in digital economy. If you've ever been in an Uber in North America anywhere and in an Uber in Lagos, it's a little bit more clunky here, right? The fact that you have to take out the cash and pay the driver and hope the guy has change and he can give it back to you, it's very clunky. Meanwhile, in America, they just charge your card and you can jump out of the cab. And that's why we need modern payments infrastructure. And at Flutterwave, we have a few principles for what it needs to look like. The first is that it has to be omni-channel. So the first thing is we understand there are constraints with cards and the cost of card transactions. And therefore, we have to allow for more payment types. So bank account payment types, for example, are some of the largest volume payments in Nigeria, but they haven't been completely enabled across the board with e-mandates. And as a result, it's stalling the growth of the system. And then there are many other things like mobile money that are growing, but haven't actually reached the traction that is necessary for them to achieve scale. Customers have to be able to make and receive payments anywhere and wherever. The other thing is that the growth of central switches is really changing the landscape. And I really want to commend NIBS as well about the work they've been doing in the Nigerian space. A lot of people take it for granted, but if you go to the US, there is no real-time payment system. A lot of our payment systems in Nigeria are actually far, far more advanced than what you have in the US or in many other parts of the world. And we tend to take that for granted. But as this trend continues to grow, what is basically going to happen is that every bank is going to be able to serve any customer across Africa. And that radically changes the landscape for what a bank scale could look like, even when they don't have a presence in many countries. Now, I wanted to just quickly talk about giving that payments for people, building payment products for people, and payment infrastructure for people. Okay, so first thing I wanted to say was, what is really a payment, right? Payment is a commercial intent expressed in monetary terms. And what a lot of banks don't really understand right now is you're seeing numbers fly out and direct debits go out, but that's actually a language. Your customers are talking to you. They're telling you, this is what I do with my life every day. I pay my bills, I pay my school fees, my children's school fees, I do this, I do that. And many banks aren't actually reading that as data, they're just reading it as zeros and ones. But if you actually read that as data, you could actually create new opportunities for yourself and deepen your margins. So this is a really funny joke about how basically a bank doesn't understand what's going on with a customer's mortgage, and so they're basically putting them giving them a higher interest rate. But the general idea is because so much of our economy is run with cash and we're receiving large aggregated payments deposited into our banks, we don't even know what our customers are doing. Our banks are big black holes for customers' intent. And that means that we can be so easily disintermediated by other platforms that are aggregating more data. And so the beauty of digital payments and why more people have to invest in it and work together with collaborators building stuff there is that it comes with data about the customer's intent. I'm going to quickly rush through this. And here's the key piece here is data. Whenever you're partnering with any third party, are you getting data out of that interaction with the third party? It's not just for you to open your APIs, but it's also for you to get data that actually helps you make better business decisions. And I just want to end on this note very quickly, on a very practical example of how data distinguishes between what I call a low-value payment play and a very high-margin payment play. All of us keep complaining, the interchange isn't enough, you're not making enough money, the fee income is under revenue. But the reality is it's not really true if you actually look at it. So here's Square as a payment company, right? I get into a cab, this is a normal cab, I do my ride, and then the driver pulls out a Square at the end of the ride, and I swipe my card and pay. That's, at most 2.8%, right? And the taxi driver gets to keep 98.8%. And literally, the same ride on an Uber is a 25% margin, right? Now, I'm not saying banks should go launch Ubers, that's not what I'm saying. But what I'm basically trying to say is having data and information about what your customers are trying to do, and then basically leveraging your ecosystem to build platform plays for that, basically empowers you to be able to make even more revenue than you currently do today. These are other examples of people who are doing the exact same thing, earning 30%, 20% margins, just because they have information, they're reading payments as the language that it is. I was going to talk about GT Bank's Food and Drink Fair as a very local example to bring it back home. One of the things I really like about GT Bank's strategy, I'm not saying this to any other bank. I think every bank is doing really cool stuff. But I really like what GT Bank has done with a value chain model. So by bringing all their food and drink people together, business relationships were formed, and they've basically consolidated their value chain. So if I want to buy from somebody who sells pineapples, I met them at the GT Bank fair, and so I'm going to buy from them, they're a GT Bank customer, and then I'm going to make my smoothies, and I'm going to sell to GT Bank customers, and it's basically like a round robin. All that money stays within their bank. And that's why it's really important for you to think very differently about platform plays in payments. GT Bank has basically built a physical platform for their customers in a particular industry to meet and to keep transactions within their bank. And so it makes it a lot easier for them to claim value from those transactions. But other banks, and they're only able to do this because they've kind of figured out that they have to interpret data in one way or the other, and they've done that physically. But I think there's more opportunities for platform plays that may be lower cost, higher return in the same sense. So basically, here is the question, right? What are you going to make your bank? Are you going to make your bank a payments, you're going to build a payments division in your bank, or are you going to build a platform company out of your bank? Thank you.